Gold is sitting at $5,086 an ounce right now, and it just dropped $85 in a single session. But while gold is pulling back today, crude oil just exploded past $100 a barrel. Silver is barely moving. And the real question is, what is the market telling us? And are you positioned to profit from it? Welcome back to Silver Signals. I'm your host, Yali Jiang, and today is Monday, March 9th, 2026. If you haven't subscribed yet, please hit that subscribe button right now because you do not want to miss what's coming in today's video. Gold closed last Friday near 5,170. And this morning, we're looking at a bid of 5,086 with a session low of 5,013. Just 2 years ago, gold was trading below 2,300, which means we have more than doubled in price in under 24 months. When the price drops $85, people panic and start asking, is the rally over? Is this the top? Should I sell? But here's the thing you need to burn into your memory. Healthy bull markets correct, they breathe, they pull back, and what we're seeing right now looks much more like a healthy exhale than a structural breakdown. The low today was 5,013 and the high was 5,250. That is nearly a $200 range in a single session. The sellers pushed it down, but buyers came in hard at 5,000, held that level, and we bounced. The bears tried to break 5,000 and they failed. The XAU index is sitting at 401.68, down 2.83%, and the HUI Gold Bugs index is at 839.98, down 2.77%. The mining stocks are falling roughly in line with gold itself, not dramatically worse, which tells me institutional money is not running for the exits. This is a shakeout, not a stampede. The Shanghai Gold Exchange AM fix on March 8th came in at 1,143 Chinese yuan per gram, and the PM fix settled at 1,139 yuan. The fact that the Shanghai fix remains elevated even as Western spot prices pull back today suggests that Eastern demand is holding firm. The East is not selling, the East is accumulating. Now I want to pause and ask you something directly. Drop a comment below and tell me, are you buying this dip in gold, holding your position, or have you already taken some profits off the table? The Silver Signals community is one of the most informed audiences in the precious metal space, and I genuinely want to know what you are doing with your real money right now. Brent crude this morning is at $102.05 per barrel, and the May Brent futures contract hit an intraday high of $119.50 today. That contract opened at $99.75 and ripped to nearly $120 in the same session. Something real is moving the energy markets. Oil is the inflation heartbeat. When crude spikes, transportation costs spike, food costs spike, and everything that moves on a truck or a ship gets more expensive. And inflation, real, persistent, felt in your wallet inflation, is gold's best friend, which means rising oil is essentially pouring fuel on the fire that has been burning under gold for 2 years. Oil shocks also destabilize geopolitics. They put pressure on oil importing nations, they create currency stress, and they raise the risk of financial instability. And when the world gets more unstable, investors reach for the one asset that has survived every empire, every war, and every currency collapse in all of human history: gold. The gold-to-oil ratio right now, with gold at $5,086 and oil at $100, is approximately 50-1. When oil is expensive and gold is still elevated, it signals that real asset values are rising across the board. Energy, metals, food are all repricing higher, and your paper money is buying less of the real world. Silver is at $84.13 bid as of 11:08 Eastern Time, and while gold is down 1.65% today, silver is down just 0.25%, a tiny fraction. Silver's relative strength versus gold during a gold pullback is classically a setup for silver outperformance on the next leg up. The gold to silver ratio right now is roughly 60-1, and historically that ratio averages somewhere between 40 and 60. Every single time in the past 50 years that oil has spiked hard, inflation has run hot, and the gold-silver ratio has sat around 60. Silver has outperformed gold in the following 12 months. Not sometimes, nearly every time. Platinum is at $2,155, actually up $10 or 0.47% today, and palladium is at $1,635, up $24 or 1.49%. So while gold pulls back, silver is holding firm, platinum is rising, palladium is rising, and oil is exploding. The inflation trade is alive and well. Now here's the moment I have been building toward. Look at the Brent crude forward curve, where May 2026 is at $101, but by December 2026, it drops to $76. And from 2029 all the way out to 2033, the futures market is pricing crude at roughly $69 to $70 a barrel. The market is saying loud and clear, this oil spike is temporary. It is a geopolitical premium that the market believes will fade. Here's the real twist. If the market is right and oil fades back to $70, inflation eases, the Fed cuts rates, the dollar weakens, and gold goes higher. But if the market is wrong and oil stays above 100, then inflation stays hot, the Fed cannot cut, and gold holds up as an inflation hedge anyway. Either way, gold wins. The miners are not collapsing. Shanghai demand is holding, silver is outperforming, oil is screaming, and the forward curve confirms the macro runway for gold remains wide open. The real signal today is not the red candle on the gold chart. It is the convergence of oil, silver, platinum, palladium, and mining stocks all pointing in the same direction. If this video gave you even one new insight, please hit that like button because it genuinely helps this channel reach more people who are trying to make sense of these markets. And if you are not subscribed yet, please subscribe right now and ring the bell. In a market moving this fast, being 1 week late on information can cost you real money. I'm Yali Jiang. Today is March 9th, 2026. Gold is at $5,086. Oil is above 100. And the real story, as always, is hiding just beneath the surface. Stay sharp, stay curious, keep watching the signals, and I'll see you in the next one.